With winter quickly drawing to a close, the lack of sustained cold this season, not to mention rising supply, has taken a toll on the market. The latest indication of the general loosening experienced this winter was Thursday's storage inventory data, which traders continued to digest at the end of the week. Total inventories reached 2,266 billion cubic feet, which is 328 billion higher than the same time last year and 183 billion above the 5-year average. Given the lack of sustained widespread cold in the forecast, the year-per-year storage comparison, which sat at a 308 billion cubic feet deficit to close 2022, is projected to exceed 500 billion in early March. The massive 800 billion cubic feet swing from shortage to surplus is the primary driver of the natural gas collapse over the past 2 months. The market has been around 5 billion cubic feet per day oversupplied on average on a weather-adjusted basis year to date. While there may be some tightening in the coming weeks as Freeport LNG ramps up toward full capacity, analysts said the storage data highlights the market quandary ahead of what they continue to expect is growing supply through 2023. The average total supply of natural gas rose by 0.5% or 0.6 billion cubic feet per day compared with the previous report week. An increase in dry natural gas production of 1.9% or 1.9 billion cubic feet per day was partially offset by a decrease in average net imports from Canada, which fell 22.6% or 1.2 billion cubic feet per day from last week. Total U.S. consumption of natural gas fell by 12.2% or 12 billion cubic feet per day compared with the previous report week. Natural gas consumption in the residential and commercial sectors declined by 22.4% or 9.5 billion cubic feet per day, driven by warmer weather across the eastern part of the country. Consumption in the electric power sector declined by 5.2% or 1.6 billion cubic feet per day, and industrial sector consumption fell by 3.6% or 0.9 billion cubic feet per day. Natural gas deliveries to U.S. LNG export facilities averaged 12.9 billion cubic feet per day, or 0.5 billion cubic feet per day higher than last week. While there have been concerns of production shut-ins in the coming months amid the lower price environment, coal-to-gas switching has picked up over the past week as Henry Hub prices dipped below $2.50. For example, after having trended in the 67% range throughout January, the gas share of thermal generation rose to the 71% range over the past few days and set new seasonal highs. Looking ahead, the return of liquefied natural gas exports from Freeport and cooler March weather could provide an opportunity for a short-term bottom after April becomes the front-month contract.